I will present about the type of M&A. So M&A can take several forms, which is horizontal, vertical, conglomerate, and friendly or hostile. But in banks, horizontal merger are the most common because they help strengthen market position. So the RHB and OSK merger is a horizontal merger because both companies are in financial service, but RHB focus on retail and commercial banking, while OSK is strong in investment banking and capital market. So by merging, RHB could expand its product offering and capabilities. This was also a friendly acquisition because management teams agreed and cooperated throughout. They also got early approval from Bank Negara Malaysia and Ministry of Finance to make it smooth. OSK shareholders even got RHB shares, so they stayed involved in the new group. Strategically, the merger strengthened RHB investment banking service and creating a full-service financial group. So it's a great example of how a friendly, horizontal, and strategic merger works in the Malaysia banking sector.
RHB Bank's merger and acquisition activities were mainly driven by economies of scale, combining complementary resources, and industry consolidation. First, economies of scale allow RHB Bank to reduce its operating costs by spreading fixed expenses such as branch networks, technology systems, and regulatory costs across a larger customer and asset base after its mergers. Second, by acquiring OSK Investment Bank, RHB combined complementary resources where traditional commercial banking strengths were integrated with the investment bank and wealth management expertise. It enabled revenue diversification and expanded financial services. Finally, industry consolidation in Malaysia's banking sector, particularly after the Asian financial crisis, encouraged stronger and more stable banks. Through these strategies, RHB Bank enhanced efficiency, competitiveness, and long-term growth. Next, we analyze the financial data from 2010 and 2011 to compare size of both banks before the merger. In 2010, their share price was RM7.60 with over 2.1 billion shares. By 2011, their share count jumped significantly to 3.3 billion units, which signaling strong growth. In contrast, OSK Investment Bank was much smaller. Their share price rose from RM1.60 to RM1.90. Showing stability, but their share base remains steady at around 940 million. RHB represents 90% of the holding compared to OSK's 10%. This 90-10 split clearly proves RHB dominant as the anchor bank with the financial muscle to acquire the smaller, specialized OSK.
My name is Ani Maja Putri binti Muhammad Zaizul from TBA 2723A. So next slide, I will explain about the cost of acquisition paid by the acquiring firm after the merger between RHB Bank and OSK Investment Bank. So first, looking at RHB Bank, RHB acquired 90% ownership of the merged entity. So based on the total shares and valuation, the cost of acquisition for RHB was calculated to be approximately RM13.57 billion using the new share price of RM7 per share. Next, for OSK Investment Bank, OSK retained 10% ownership in the merged company. Next, for OSK Investment Bank, OSK retained 10% ownership in the merged company. The value of OSK's portion amounted to around 656.64 million, also calculated using the same new share price of RM7. After combining both portions, the total cost of acquisition for the RHB and OSK merger come to approximately RM14.22 billion. In summary, this shows that RHB as the acquiring firm made a significant financial investment to gain majority control, while OSK maintained a smaller stake and continued participation in the merged group.
So next is to compute the synergy value. Synergy value is basically a value created after the merger can be a profit after the merger. It is worth better for them to combine rather than their own. To compute the synergy value equal to value of combined firm minus value of firm A plus firm B. So to compute the value of each firm, we have to calculate the share price times number of share. So the value for firm A is 24,719,100,000. Same goes to firm B, and the value of combined firm, how do we get it, is new share price times the total shares after merger. We get the total share price already before, and the total shares after. How do we get the value of combined firm? Is the new share price times total shares after merger. We get the new share price already before, and the total shares after merger is firm RHB number of shares plus OSK number of shares, and then we get the total shares after merger. So we plug in all the amount into the formula, that we get 33,003,55200 ringgit Malaysia for the synergy value. And then we're going to calculate the net present value, earning per share, and price per earning ratio of the merger. There are two types of acquisition. We have cash acquisition and stock acquisition. So we're going to get one by one. So to find the net present value, we have to have the value of all this, which is value OSK to RHB, value RHB Bank after merger, market price per share after merger, and then we can get the NPV of the merger. So for cash acquisition and stock acquisition, there are different formula for each. In cash acquisition, for the NPV, after we get the value of all each, we get the NPV after the merger is 9,137,160,000. But for the stock acquisition, the value for NPV, we get 5,796,069,397. So to calculate the earnings per share and price per earning ratio, we have to first find the net income. So to find the net income value of firm A, which is the RHB, divide by price earning ratio, and then we get that amount for each company, RHB and OSK Investment Bank, and then we can calculate the earning per share and price per earning ratio. So to find the EPS, net income must be divided by new stock, so we get the 1 ringgit 57 cent. And for price per earning ratio, the market price must be divided by earnings per share, so that we get 4.74 times.
Now let's move on to the financial side effect, starting with the share price of both companies before the merger. So in 2010, RHB Bank Berhad share price was 7 ringgit 60 cents per share. So this showed that RHB Bank already a strong and well-established bank with high investor confidence before the merger took place. On the other hand, OSK Investment Bank share price in 2010 was only 1 ringgit 60 cents per share. So compared to RHB, OSK had a lower share price because it was a smaller investment that focused mainly on capital market and security trading. The difference in share price reflect the different size and market positions of the two companies. So RHB was a large commercial bank, while OSK was more specialized in investment banking. So this financial background helped us understand why RHB became the main controlling company after the merger, while OSK joined as a strategic partner to strengthen RHB investment banking service.
Next, I will explain about how the merger between RHB Bank and OSK Investment Bank result in financial gains. First, in terms of ownership structure, after the merger, RHB Bank held 90% of the shares, while OSK Investment Bank held 10%. This gave RHB full control of the group, while still allowing OSK to contribute its strong investment banking expertise. Next, the merger added value to shareholders. Before the merger, RHB share price was 7 ringgit 60 cents and OSK shares price was 1 ringgit and 60 cents. After the merger in 2011, the weighted average share price became 7 ringgit. So this shows that the investor had confidence in the stronger and more diversified banking group. In addition, the merger created significant operational savings, so the group saves about 1.33 billion by eliminating duplicate roles, integrating system, and consolidating branches. This cost saving improved efficiency and increased profitability. Furthermore, earnings were enhanced after the merger. By combining RHB commercial banking operation with OSK investment banking business, the group generated higher revenue. So the total value of the merged company reached 26.5 billion, showing strong financial performance. Next, moving on to defensive tactics. OSK adopted a strategic and proactive approach in the merger. In 2011, OSK strengthened its investment banking business and expanded its in present Southeast Asia to negotiate from a strong position. The deal also received early approval from Bank Negara Malaysia and the Ministry of Finance, ensuring regulatory confidence. Lastly, the merger involved both cash and share of RHB, allowing OSK shareholders to retain influence. OSK's brand and values were protected, while the merger successfully created Malaysia's largest investment banking group. In conclusion, the RHB-OSK merger resulted in financial gain, operational efficiency, and long-term strategic growth for both companies. That's all from our group. Thank you for listening.